Back to another episode of my trading vlog, where most of the views come from returning subscribers. If that's you, I'd appreciate if you hit the like button. If not, consider subscribing. First and foremost, this wave analysis stuff is pretty complicated. You can go to my channel homepage, and there's a video there that explains how I do it. If you're not following me on Twitter, please consider following me on Twitter as well. If you have a request for a chart analysis, go ahead and drop it here. I'm going to be doing some of that today for IWM and AMD after I hit AMC and GameStop. Not going to try to go over too many things today because I want to go into a little more depth, but also keep this video kind of short. I always try, always fail, but let's get going on AMC on the hourly time frame. I had to revise my count here just a little bit. We find ourselves grinding sideways after reaching support and resistance at 403 and not really finding any progress. So those motive wave counts break down right away and we start counting in ABC waveforms. This is a good time to find ourselves in a horizontal triangle in wave B, which I have shown in blue at the minuet degree. Typically what this means is that the next impulse for wave C will come in strongly, and that is targeting 348. You may notice, if you're following my analysis very closely, which I don't think I'm following quite this closely, but you can notice that I now have the minute degree shown in white for A, B, and C targeting 356. I had to bump up my wave degrees in order to get that horizontal triangle to fit within the sub-minuet level. Does that make sense? The opposing trendline touches between the blue wave B need to be on the yellow sub-minuet degree. And so I had to shift that around. Very important to do that. You can see I have a couple of targets. Those 100% targets were met. We didn't meet this last 100% target at 402. On the smaller time frame, we did. But on this time frame, the outer time frame, we did not. It's important to keep your time frames and your wave degrees correctly aligned, because the bigger the time is, then the less extreme price action you're going to see, and that can affect your wave count. That said, it looks like we're hitting overbought again on the RSI, and sure enough, we're coming in for a trend line touch of this upper level. You may notice that this actually hasn't confirmed. I'm connecting 2 points in time, which haven't quite been proven yet. We need to find a lower low, and then we'll prove this to be a lower high. We could still push out and up from here. If we do, we're challenging this downtrend. We'll talk bullish scenarios then. Until then, I'm expecting this horizontal triangle to continue and project more downside into the near future. Going over to GameStop next, the second most beloved stock on my channel. After all, the channel did start on AMC and not GameStop. I'm typically more bullish on GameStop, and I have updated my analysis here because we didn't come down for that 286 target. I thought we had a motive waveform heading lower, but we found support at 2270, just below there. There was a bullish divergence here between waves 3 and 5, and I thought maybe where wave 5 was the end of wave 3, and this bullish divergence was within wave 3, but no, it's actually on 3 and 5. Of course, that's where the bullish divergence is. That's almost where it always is. And we find ourselves in a corrective uptrend, which, of course, once we reach overbought in a corrective uptrend, we're looking for that to be the top of that trend. And so I have an ABC, a three waveform pushing up, targeting 2479. We aren't necessarily going to get there. This downtrend came in and rejected that price movement. We're going to need to get below 2329 or above 2426 before we have any sort of bullish or bearish breakout. We could spin along this downtrend for a while before we find ourselves up and out and away, or heading lower for more downside. Very neutral right now, I think. I have an alternate wave count shown in gray, where we very well could have seen waves A, B, and C in a reactionary trend heading lower. X, which just connects two measured moves down, or two ABC cycles, and then I show that second ABC cycle in gray for A, B, and C, where we would theoretically be finding the low and bottom at 2214, and then this push up could turn into an impulse. And I've done that just in case we break this downtrend and we find more upside. There will always be multiple correct Elliott waveform counts, and that's because of the nature of corrective and motive waves beginning both with first a motive, then a corrective, and then another motive wave. That creates the uncertainty that always exists in the markets. Whether you get waves 4 and 5 is really telling, and that's where we're going to find we get exceptions to rules in the leading or ending diagonal triangles. I mentioned that here because we're going to encounter one of those in the next chart, which is AMD. Christian asked me to do this one, so I went and had a look, and it turned out that I had done some analysis in the past, but I started all over again. I wanted to zoom out to the monthly time frame to show the entire chart first, because I wanted to get the general overall picture first. The larger wave degrees will definitely help dictate which way your smaller wave degrees should be annotated. When I did this, well, we find a big rally from like seriously $1.70 to 169. That's an impulse wave. That is nuts. And you can see how the RSI is coming into overbought so many different times, ultimately making this really big bearish divergence between August of 2020 and November of 2021. I would expect to see the price top out when we reach that divergence line in the future, and we'll get into that when I zoom in here. But for now, I just want to say that this looks like we had a big wave for 1, 2, 3, taking us like seriously from $9 to $163. Jeez. And this chart is obviously on a algorithmic scale, not a linear scale. It's important to use both. When you have a wave that goes from like $2 to $160, you're really going to want to use a log chart, because that linear chart is just not going to make any sense. It's just going to go straight up. At any rate, we find ourselves now breaking this uptrend, and we are in, I believe, wave 5 after a spill down for wave 4. And I just mentioned that because this is how my analysis changed when I decided that the spill from the high in 2021 was wave 4. And that is because this very well could have been a motive wave pushing down to the low in 2022. And that count would have been, and follow me along here, 1, 2. And then we start wave 3, which has 5 waves inside of it and commonly extends. And so we start counting 1 of 3, 2 of 3, and then we could have extended again. 1, so this would be, let's see here. Ready for this? 1, 3 of 3. 2, 3 of 3, 3, 3 of 3, 4, 3 of 3, 5, 3 of 3, 4 of 3, 5 of 3, okay? And that would give us 1, 2, 1, 2, 3, 4, 5, 1, 2, 3, wow, I got lost in those wave extensions. That was too complicated. That motive wave count, as you can see, was not very productive. And as we were coming out of an uptrend, I decided that I needed to characterize this wave as a corrective trend. And when I did that, I found wave 4 on the cycle degree to be very appropriate. And that's why I did it the way I did it. It's very important, because if this is actually an impulse wave heading lower, this pull up could be corrective, and we're looking for wave C to push us lower, which is a very common thing I'm seeing, and what I'm actually forecasting in SPY right now is big ABC. And I don't think that AMD is making that same move. Instead, I'm thinking that AMD made a corrective push down and is now heading higher in a motive wave, which will top out the cycle wave degree 5. I'm going to run through this count very, very quickly. I believe that the primary degree, we have waves A, and that bottom target would come in at 62.36, which is pretty extreme, especially if price was at $110 or $103. You're saying we're basically going to drop 40%. Price dropped about 40%, even more than there, touching down at that $56 level, just about halved the price of AMD. And when I zoomed out on that monthly time frame, you would never have guessed that dip was 50%, both on log scale. This is why it's important to use both log and linear scale. At this point, on just this price range, you could use linear scale. I just leave it in log scale because the difference is cosmetic. So we have this big low towards 62.36, and this I'm calling wave C, and this is some sort of broadening pattern through here, which is a triangle that is reversed. And it's super annoying. This is like my least favorite pattern ever, are these broadening patterns, because they're so unpredictable. You get a higher high and a lower low, and then a higher high and then a lower low. And it's just, it's the most confusing thing ever, and it just annoys me. From there, we started pushing higher, and this was clearly a motive wave count, and I couldn't get around it. The only way to get around this push up, this corrective trend that started in October of 2022, would be to characterize it as an ABC reactionary wave, which would put us into a back-to-back 3-3, in which case we'd be looking for 5 spilling down. The 3-3-5 pattern is part of a broadening pattern. Again, broadening patterns are hard to predict, so we have to keep that in mind, that the alternative wave count for A, B, and C pushing higher in a reactionary trend and it not being a motive wave may still be valid. When would that become invalid? I don't think it would ever become invalid, because A, B, C waves don't follow the same rules as waves 1 and 3. And wave 5 doesn't really have any rules. It just can't be well, wave 3 can't be the shortest wave. All right, so if wave 3 is shorter than wave 1, then we have a rule for wave 5 where 5 has to be even smaller. And that's where we see the price to move into a converging trends, often called rising diagonals. Anyway, moving on from here, it's possible that this 5-wave count I show through here as 1, 2, 1, 2, 1, 2, this could be a leading diagonal triangle where this 1 becomes wave A, 2 becomes B, and 3 becomes C, and then we top out and push out lower. So just remember that. If we fail bullish continuation at this point, which I think we would start to call it around $100, $101, getting below there, You can see I have a wave 4 expecting to come in and test this uptrend. If we get below that trend line, then maybe we start to say that this is no longer a motive wave. But for the time being, I like to say that on the primary degree, we've had waves 1, 2, and we started extending that third wave at the intermediate level shown in blue, 1, 2, and then the next third wave also extended at the minor degree at 1, 2, 3. We're coming in for 4. We'll hit 5. It may truncate. That will complete wave 3 in blue. Then we'll retrace for wave 4 and then top out for wave 5 at the intermediate level, completing primary wave 3. And that will give us a sideways grind through here. And it's very possible that we actually come all the way up to the highest close on the daily time frame, which would be 161.91. In which case, I believe what we're going to be forming would be characterized as an Adam and Eve double top, which would confirm at 55. Of course, that doesn't have to happen. Don't panic. But this is that kind of a setup. I would doubt that we ever see AMD go below $50. It's pretty clear to me that this will continue to push higher after some sideways grind. It's very possible that some of these companies are making a lot of progress now, and that progress will slow eventually, just not now. Now is not the time. We may see improving fundamentals for a while as this motive wave begins to push higher, and then it's probably going to have to do with China's economy when and Taiwan when we see the tech sector start to reverse. And so I'm following this double 3-wave extension, which here I'm leaving a note. To me, this looks like a great setup for a rising diagonal in wave position 5 at the cycle degree. That makes a lot of sense. It really does. And so that's what I'm going to be looking for moving into the future. There's a lot of things here that I wanted to cover. I used the trends first to identify my motive wave trends, and then I used the divergences in the RSI to find where those waves were peaking between waves 3 and 5. And now I'm looking for tests of support and resistance at waves 1. And so wave 4 here at the minor degree should not pass above the peak of wave 1, which was at $100.50, which is why I say that that's really where bearish reversal is. And in fact, I should probably just label that right there really quickly. I don't like to do this while I'm recording, but it's good sometimes, I think. Then I don't forget, and it's on the charts. There we go, bearish reversal. Naturally, that would mean that wave C in this correction down would be somewhat short. You can see the target at 100%. It's actually 93.83, and the extension comes right down to that uptrend. There are some points of confluence here. We're going to see if 100 can hold or not. It may. I really think it may. And this may cause some sideways grind through here. If I had to guess, I would have to give it, in the short term at the minor degree, an inverted head and shoulder bottom, because wave 4 would give us the top of that head. Wave 5 might look like 3 waves if it's truncated, and then wave 4 at the next wave degree is 3. Fancy that. Wave 5 would break that neck and that was it, the armpit? What do you call it? Shoulder line? Neckline. The net would break the neckline of the inverted head and shoulder pattern and push higher into wave 5. Pretty interesting, right? Now, moving on from AMD, I want to look at IWM as well. IWM, I used to follow it, and then I didn't. And honestly, in fact, I'll just zoom in over here. This is definitely a high and tight flag where we had a massive flag pull through here. You can just see this incredible impulse going up into 2021, and then there was this big sideways grind, and we even got an upward breakout pushing above the highest high of that pattern, and then a reversal, and price failed to reestablish that high and began breaking out downward. A high and tight flag at this wave degree would be incredibly powerful and send the price soaring. The target for that would have been very, very high, 303, which would have been seriously a tremendous move higher. But that's not what happened. Instead, we saw the price reverse. And so I'm going to zoom in here and we'll start to talk about what I'm seeing. Because unlike AMD, I think I do see an ABC form playing out here on a very large wave degree, in which case we could see a spill downward. And this is being characterized again by a horizontal triangle appearing as wave B. I'm showing wave B at the intermediate level, it looks like. Let's start at the top from 2021, where we had a high towards 242. And we started pushing downwards. And you can see that I have A or 1, B or 2. And that's because this very well could be characterized, again, as impulse or motive. And sometimes the first impulse is 3 waves. So following this count, my preferred count is minor 1, 2, and then we start to extend that third minor wave at the minute degree for 1, 2, 3, 4, and 5. This gives us wave 4 in the minor degree as a sharp, which is juxtaposed to the sideways correction for wave 2 on the same degree, and that is what we're looking for. We see this same sort of agreeance at the minute degree where wave 4 was sharp at the minute degree and 2 was sideways at the minute degree. So we have alternating corrective forms on both wave degrees as we push through a third wave extension, which contributed towards the formation of this channel, which was then broken by 4, and 5 found support right in the middle of there. What we follow next is the corrective reactionary trend to that motive trend heading lower, which was impulse A, and we find A, B, and C at the minor degree, and then we start moving in waves of 3 that become harder and harder to track at smaller degrees. I'll have to look into this a little more closely, so look forward to that on the IWM chart. I'm going to go into the hourly time frame. I'm going to be showing what this looks like on the smaller wave degrees. Again, it's going to be following the ABC patterns between opposing trendline touches of this triangle, in which case we're looking for waves A, B, C, D, and E actually occurs down here. We seem to be going above the top here, which makes me think this might be wave A, B, C, but no. Then we didn't get a touch point for wave D, unless we need to do this and cut out all of this. But to me, that's a little inappropriate. There's a lot of price action down there that we just can't simply ignore. I think if we want to finagle it to show that the price is spinning along that level, that's okay, but we can't just omit it entirely. Perhaps I should go out into the weekly chart and see if that looks better, take out some more price data that way by time frame. It's tough. We're overthrowing this top trend. It's very possible that I just don't have this top level drawn correctly yet because we simply don't have the higher high set. In an ABC corrective wave, we're going to take the bottom to the top. We could see a high at 197.90, and this triangle could simply look a little different. It really could. Maybe it even starts way back here. Very possible that we come up to 197.90 and then reverse downward to start wave C. This to me doesn't look like a bottom, not yet. If we can get above 201, then maybe. And you'll notice that this chart basically looks like SPY, where this August high of 2022, an SPY signaled bullish reversal. And as we pass that, SPY went up higher, but it appears to be topping now. So that makes me think bull trap. IWM, I think, is not getting as much love, which is really interesting. These are ETFs, mind you. And so it would be you have to do a very deep dive analysis to understand whether or not the push in the ETFs is being driven by fewer select stocks with large market caps, or if the market's being pushed up by smaller companies built within these ETFs over larger portions of the industries they represent. I believe that the drives up are being caused in a bubble-like state where you have a few big mega caps that are starting to move the ETFs higher, in which case SPY is overvalued and IWM here is not as overvalued and may actually be reflecting a more true price. Whatever happens, we're going to be looking for resistance here very shortly, and perhaps I even have this drawn incorrectly. Maybe this is actually A, B, and C. When you get 2 consecutive touches along a trend line, it's typically because you have an extended A wave, B wave comes in like at the normal height it would, and then C is super short. And then we start our A, B, and C, in which case 100 comes in at 194. You can see, and that would still contribute to the construction of this horizontal triangle. And there may be more than 5 touch points in here. The RSI is going to get easier to push between overbought and oversold until we get a breakout. You can see that volume picked up pretty high down here. And for me, that's where I'd want to start a chart pattern analysis. Maybe we have some sort of broadening pattern through here, and this is what I want to follow, in which case this would be a partial decline. We put a price target up here. We could be grinding through a horizontal trading range as well. Nonetheless, until we get above this August high, I'm not really going to be flipping bullish here. To me, this looks like A and B, unlike AMD, which looked like 4 and 5. It's important to know those differences. The wave degrees matter a lot. And that's, let's see, AMC, GameStop, IWM, and AMD. I wanted to go into PLBY too. I know that this video is very long at this point, and people probably aren't watching, which is just fine. It's forecasting bullish breakout on Playboy, and we got a big push higher, and what we're looking for now is support and resistance to come in before we hit bearish reversal at 173. We've broken this uptrend through here. This tells me that we actually could be seeing the top of a motive wave today and not yesterday, and so I have that alternative count here in gray just in case, because again, the bearish divergence between waves 3 and 5 is pretty common. It could show up between waves 1 and 1 if that third wave is extending. We never reached overbought on the RSI or oversold on the RSI to signal the end of that corrective wave 2, but if we're going to get a very bullish push higher, I don't think we would. It makes sense that the RSI would fall short of oversold and we would start to see the construction of that third wave at the 70 wet degree shown in yellow, in which case wave 2 simply can't come below 173. If we go below 173, we've broken the first rule of the motive wave progress, which is that the second wave can't completely retrace the first wave. And so as long as we're above that level, I remain bullish, in which case we could be seeing a wave 3 at the mini wet degree pushing all the way up to 206, and the minute degree would be even higher than there. You can see that there's a lot of stuff I've taken off of the charts. I do that to keep it uncluttered, but I keep these primary wave count, or these preferred wave counts through here. I don't want to say primary wave counts because that's a wave degree, primary, so I want to try to avoid that verbiage if I can. Whew, so that's a lot going on. The daily candle for Playboy looks pretty bad, of course, but that's because just like the day before, we had the big motive push higher happen early in the day, and then as the day went on, we got the corrective A, B, and C waves. You can see now that the price is pulling up, and this is to backtest this uptrend. We'll see if we can get back above it. I suspect we will personally. I don't think we're going to see the price fall here. Not much, but that's just because I'm overall very, very bullish on Playboy. And if you watch the video that's posted on my channel, you'll see why. And again, here's another triangle. But I don't think that this is A, B, and C pushing lower. I think that this is actually bottoming here in a triangle, which is it's a different situation. It happens when you have wave 5 and then a corrective A, B, and C where you get this flat pattern, and then you get a couple of reactionary waves through there that fail to break the trend in either way. But this big downtrend, the biggest downtrend, has broken, and if we can get a high above 186, preferably above 193, then we're looking at a much bigger reactionary wave, which I think could fill some gaps to the upside. First gap is around $3, and I've got price targets up here towards 217. There's Edward. Shout out to Edward, who's always like commenting first. Thank you, dude. He's been following me for like a long time. I've been doing this for a long time. It's kind of surprising. A couple years now. And honestly, if I could do this for a living, that'd be great. We'll see if that ever forms. I don't know. Here's to hoping. Happy trading.